Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio at the Stock Exchange. Well, it's been a very busy week across markets, which saw the major indexes hit new records and the price of Bitcoin top $100,000 a token for the first time ever. Actually hitting a crescendo about a half hour ago when the Bureau of Labor Statistics released that November jobs report. We'll dive into those numbers in just a moment and how they're impacting markets, but it is just one storyline we'll be covering over the next hour. Coming up on today's show, Jay Cadia, Research Fellow at the Center for Monetary and Financial Alternatives, will help us crunch the numbers and weigh in on how this week's jobs report could impact the Fed's next move. Well, Bitcoin sent shockwaves through the financial ecosystem on Wednesday when it surpassed $100,000 a token for the first time ever. And I'll speak with a crypto expert who correctly predicted when the milestone would happen, as well as Russell Okun, the first NFL player ever to be paid in Bitcoin. Well, at 9:30 a.m. Eastern, NYSE listed Albany International will ring the opening bell. You see the signage behind me and kick off this week's final session. Its CEO Gunnar Kleveland is going to join my colleague Trinity Chavez to discuss what the industrial goods company has planned heading into 2025. Well, getting back to our main story here today, and certainly one that investors are following, the Bureau of Labor Statistics released the November jobs report at 8:30 a.m. Eastern this morning. And here are the numbers you need to know. Jobs added in November at a healthy 227,000. That was above the estimate. The unemployment rate ticked a little bit higher to 4.2%, but we did see a recovery, a revision higher for the October jobs report. 36,000 roles added in October, and that was above the initial print of 12,000. Of course, October's numbers were impacted by strikes in two separate hurricanes, so a move higher, of course, in the revision is a positive. Well, joining me now to break it down is Jay Cadia. He's a research fellow at the Center for Monetary and Financial Alternatives. Jay, it's great to have you on the show this morning. And what is your take on the November jobs report?
Yeah, thanks for having me. It's good to see that the job numbers were basically in line for the most part with expectations. I think last month's job numbers caused a bit of a stir across the markets, but it seems like this one has, again, come back to normal and brings the Fed's decision to lower the interest rate by about 25 basis points back into play. And again, the good thing is in line with expectations across the board.
We did see, in fact, the Fed futures tool rise with expectations now close to 90%, in fact, that the Fed will indeed cut interest rates at its next and final meeting this year. That decision coming on Wednesday, December 18th. Explain specifically, Jay, how this jobs report does give traders more optimism that the Fed will move forward with a rate cut.
Well, of course, the Fed's rate is in some sense inversely aligned with job performance. So when unemployment is high, the Fed wants to reduce the interest rate, and when unemployment is low, it wants to increase it to prevent the economy from overheating. And so the baked-in expectation going in was that the Fed would reduce interest rates by 25 basis points. So the jobs report would have to show something completely out of line with expectations for it to think again whether it should do that or not. So if the numbers had come in much lower than expectation, the Fed would have definitely lowered the basis points by 25 basis points, and vice versa, if that makes any sense.
I want to get your take on the state of the overall economy. We had heard from Fed Chair Jerome Powell earlier this week at the Deal Book Conference. He seemed to be pretty optimistic.
I echo those views. People, again, thought that the inflation numbers were a little disappointing, given that it was about 2.6% year over year. I tend to disagree with looking at year over year numbers and more at the recent trend, which for inflation has been coming down for months. There doesn't seem to be any dogmatic need to bring inflation down to 2% to such a large extent that it starts making the Fed and the overall economic projections stop making sense. So by all of those metrics, I think we're doing very well heading into December here.
I do want to talk more about what we can expect next week with two inflation reports on tap. Of course, the consumer price index and the producer price index. What trend are you anticipating for November?
If you ask me off the top of my head, I think it's probably going to stay quite similar. I don't think a 25 basis point change to the federal funds rate is going to have an immediate effect that way. Of course, there are lagged and leading effects from previous rate decreases. In general, I'm not a very month-to-month look at every inflation report kind of person and care more about the overall trend, which is definitely headed in the right direction. I expect that trend to continue. But I do want to say that even if inflation comes in at, say, maybe 2.7% or 2.5%, neither of those two things are a giant worry sign about anything being structurally wrong with the economy.
How do some of the tariff discussions by President-elect Donald Trump impact your outlook?
I work at a libertarian think tank, so I think going in, you kind of expect what I'm going to say about this. Tariffs are a bad idea. This shouldn't be happening. Um, Having said, I mean, there's lots of bad economic proposals out there, unfortunately, in our political system. I think tariffs are one of them. People tend to overweigh a little how tariffs will affect overall price levels. Remember that tariffs are meant to increase or decrease relative prices, right? That's kind of the point of a tariff. So I tend to not worry too much about the inflationary effects of tariffs. Rather, it tends to make some specific goods more expensive. And it basically leads to an inoptimal outcome in the economy, which just makes the overall economic performance worse.
We've seen stocks hit record high after record high, of course, a lot of that fueled by the post-election rally, a decisive victory. The market likes certainty. That is exactly what it got in early November. I'm curious to hear from you, Jay, in terms of how much longer you think this market can run.
Well, not at the current level, at a sustainable level, but the U.S. economy is great. It's very resilient, and it's been that way basically for decades. As much as we like to maybe discuss short-term effects of economic decisions, at the end of the day, the stock market bakes into account the fact that the U.S. economy is going to keep growing, it's going to keep doing well, which it of course is and has. So I would expect the overall trend of the stock market to go back to what it usually is, but perhaps not be as incredibly high as it's been this past month.
We're going to be talking about crypto a little bit later in the show, Jay. Is crypto attractive to you?
I think anything that challenges our existing monetary framework is attractive to me. Again, my libertarian bias is probably apparent here. I think for a long time, we just assumed that money has to exist in one way, in one shape and form. And certainly the work that we do here at CMFA and at the Cato Institute challenges that notion. I would love for there to be private competition for currencies, just as competition in a free market makes things better across the board. So which is why, of course, I'm a fan of crypto.
Jay Katie, he's the research fellow for the Center of Monetary and Financial Alternatives. Jay, thank you so much for joining.
Thank you so much for having me.
All right, well, speaking of crypto, a crypto expert called his shot and correctly predicted when the price of Bitcoin would top $100,000 a token for the first time ever earlier this week. He is going to join us next.
So now, Eric, this year, GIC is celebrating 40 years in the United States. What has this journey looked like for you?
We are so proud to be celebrating our 40th year in the US. In 1984, we opened up a small fixed income trading shop here. And the idea was we were a global investor, but we wanted to be local. And we thought it was really important to meet your partners in the market, get to understand the trends, and be there with the businesses that you're invested in. So we opened up our first office in what we thought was the most important market, the United States. We opened up an office 2 years later in San Francisco. And amazingly now, even 40 years later, we've got 11 offices around the world, and these are still combined our two biggest offices in the world. Along the way, we've also diversified what we do. So I mentioned we started with fixed income investing, but now all of our asset classes are invested here. So public markets like fixed income, public equities, our hedge funds business, but also our private markets, our private equity team, our infrastructure team, our real estate team. And the US has continued to grow in importance as a part of the portfolio, so it's now almost 40% of the overall exposure.
Now, Eric, tell me, what opportunities are you seeing in today's market?
Well, we always say prepare, don't predict. We do believe as investors and long-term investors that you want to be diversified. So if you look at our portfolio, it's globally diversified. It's also diversified across asset classes, but we do like to look for long secular themes. And so two that we are interested in are digitization. So we've seen a long tailwind on technology, and in particular in the US, which has been a real market leader for the last 20 years. We believe AI is really revolutionary technology, and we're investing in that space in a series of ways, A second would also be decarbonization. We do think the planet is getting warmer, and so there will be significant capital invested against mitigating that. And so over the next decade or two, we do think this is a huge opportunity for firms like GIC that are really focused on investing in these long-term projects, providing long-term solutions.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Bitcoin made history on Wednesday, surpassing $100,000 a token for the first time ever. The timing of the news may have been a surprise to some, but not our next guest, and probably not for those following crypto. Marcus Thielen, the CEO of 10x Research, a digital asset investment research firm, joins me now. Marcus, great to have you on the show. We currently see Bitcoin hovering just below 100,000 after breaking it through that record high milestone. How were you able to predict that this would happen in the 48-hour window that it did?
Yeah, thanks for having me. Of course, we looked a lot of the liquidity that was flowing into the market, the futures positioning. So it was just almost like a volleyball that was being held, underwater, and it was just a matter of time. And I think we saw this pop. And of course, there is a massive over leverage, on the short term, where basically perpetual futures open interest increased by like 50% just within basically the last week. A little consolidation now because of the high funding rates, but I think we're going to move higher from here.
Interesting. How high do you think Bitcoin can climb?
Well, I think for next year, we were targeting minimum 150K, if not above 200. And we do a lot of cycle analysis, and this is why we predicted actually that we could be at 125,000 this December. We predicted this last July based on this cycle analysis. And if the cycle just evolve based on the analysis, we should be at a minimum 150,000 next year. So another 50% really minimum upside next year.
Interesting. Any sort of volatility that could happen between here and 150,000?
Well, of course, anything can happen. But of course, we're seeing more and more institutions looking at Bitcoin. A lot of our subscribers are institutions, are hedge funds. We are also in discussions with some sovereign wealth funds, so the demand or the interest is real there. A lot can happen. What we usually see, between October to March is usually a very strong period. Then there's some consolidation. But we do think that the market is going to grind higher. And based on our analysis is that we might actually have left the Bitcoin cycle theory by next year. So meaning we're not going to have these sharp 80% plus drawdowns, because now it's really an institutional asset class. So there's a lot less downside volatility and more upside volatility.
Interesting. How much will the SEC chair pick by President-elect Donald Trump, that's Paul Atkins, move the needle when it comes to crypto?
Well, that's of course very huge. We have of course, an SEC chair right now who has been probably a little bit more timid in terms of regulation, in terms of pushing out what can be done and what cannot be done. And I think we're seeing really this new administration acting almost already. I think it's going to probably take until February, March, April until he's confirmed. So it's going to take a little bit of time. But nevertheless, I think the positive momentum is already moving. When you just consider since the US election, the market cap of crypto has increased by 1.4 trillion. I mean, this is really like a massive amount of money, that wealth that really has been really created. And I think there is no slowdown now from people kind of, building, the DeFi renaissance is really probably coming. And I think we're seeing this already, that there's a lot more inflows in the Ethereum ETF. So I think this is the next asset class in the crypto space that institutions are targeting. And we're seeing this the last couple of days in the flows there.
Interesting. I do want to talk more about that. So much focus obviously is on Bitcoin. It is the most well-known token within the cryptocurrency space, but it is a wide and complex space as well. You mentioned DeFi earlier. What else should we be watching when it comes to storylines in the entire sector?
Well, of course, there's a huge part of speculation. There's a huge part of DeFi. DeFi. This is what we had kind of like 4 years ago, really, when there were zero interest rates, and of course, crypto has higher interest rates. Therefore, crypto became a lot more attractive from the kind of yield perspective. But when you just think about where the staking yield for Ethereum, which is sort of like the interest yield for the crypto market. And that's around 3.2%. So it's nearly where the 10-year treasury yield is. So for anybody who buys suddenly Ethereum, can just get the funding yield or the staking yield. That's probably going to be included next year in some of these Ethereum ETFs. So that's going to make it very attractive for institutions. You know, they want to get some dividend yield, they want to get some yield income. And if that's going to be included under a new SEC chair, that's going to be very bullish for Ethereum, because suddenly you're opening the taps really. And I think for a lot of the salespeople that were really pushing for the Bitcoin ETF, they're going to need a new story for next year. The new story might really be Ethereum.
Interesting. Very quickly, Marcus, what's the best way to go about adding crypto to your portfolio if that is of interest to you?
Well, I mean, it's very simple, you know, to have some part in Bitcoin, some part in Ethereum, and then you already cover a lot. I think it will take probably a little bit longer until we see other ETFs, but that's probably the two asset classes. You know, there are, of course, some second order effects that are, you know, benefiting from decentralized exchanges, from trading there. I think there is a lot of stuff happening. As I said, the crypto market cap has increased by 1.4 trillion and is now at 3.6 trillion. So it actually, there's a lot of wealth has been created, and
Marcus,
this wealth will be used to build more projects.
All right, Marcus Thielen, CEO of 10X Research. Marcus, thank you so much for joining us on the show, and I have no doubt we'll be continuing to cover crypto in the future.
Thanks for having me.
All right, everyone. Well, stay with us because we will have more NYSE TV Live after a short break.
Fiserv serves fundamentally every American household, largest payment processor and largest fintech in the world.
I do want to talk about Fiserv's third quarter report. It was showing significant growth, and especially when it comes to merchant solutions. Can you talk to me about what you think is fueling this growth and how you expect to continue that momentum?
We had 28% revenue growth in Clover. Our regions outside the U.S. also are growing very, very strong. Our commitment to small business, our commitment to innovation, along with our e-commerce capabilities. So, you know, being able to serve every household across the U.S. and then in multiple countries has given us great geographic diversity and given us great capability from the largest retailers to the smallest pizzeria.
And you actually just recently announced your collaboration, your partnership rather, with DoorDash on the Crimson program. Can you talk to us more about that and why this is such a significant milestone for Fiserv?
So what we did was create a solution set for DoorDash that allows them to be able to bring a better experience to their drivers, the Dashers. And it's really an integrated approach. It's using a series of products we have. We brought a couple of partners in, both in banking and in some other expertise, but ultimately it's our core product set.
How will this help kickstart Fiserv's expansion into other sectors?
Well, I think in fact it is an opportunity to show how we sit at the intersection of banking and merchant. You know, we are the only property that can sit at that intersection, that we could deliver payment processing, Clover, to a bank.
Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Schuller here in studio. We do have some sad news here at the stock exchange. On Monday, Art Cashin, UBS's longtime director of floor operations on the floor, died at the age of 83. Cashin's legacy at the exchange goes back decades. His daily market commentary, Cashin's Comments, was distributed to clients continuously for more than 40 years. And every year on Christmas Eve and New Year's Eve, he led the singing of the 1905 song, Wait Till the Sun Shines, Nellie. Always an opportunity for the trading community and floor to get together to celebrate the holidays. I had the honor of working with Art over the past 13 years that I've been at the stock exchange working. His kindness, historical perspective, and willingness to help will be greatly missed by all. Let's take a listen to a moment of silence.
If I go back to 2021, it was really the first time in the company's history that we actually had an investor day where we showcased our first essentially 3-year strategy for the group. And it was very clear, very focused strategy. It was really about diversification, about the fact that we wanted to increase the franchise value of our reinsurance business, but we also wanted to get scale and expand on the insurance franchise. Once you have that roadmap and that vision and you have excellent people, it's amazing what you can accomplish. And I look at where we are now, 5 years later, basically. The company has more than doubled in size. Our stock has gone up over 60% over that period of time, better than the S&P. Our book value per share, which is a critical measure in insurance, is also up over 60%. And we have improved pretty much every facet of the company, from underwriting discipline to operating discipline. But one of the most important things we have done is we have created a culture of inclusion and collaboration. That's frankly what allows us to accomplish what I just discussed. One of the great things about insurance is that we have jobs for everybody, regardless of where you come from. But no, I did not think that insurance was going to be where I ended up. Mm-hmm. I had gone to the Johns Hopkins School of Advanced International Studies for my master's. I have a master's in international economics. I speak 3 languages, and I had a lot of experience in Latin America. So I thought there's got to be a multinational company out there that could use somebody with my talents. But I didn't know what industry, and I didn't care what industry at the time, to be perfectly honest. So I had applied to different companies. And the way I ended up in insurance is my older brother, who had worked for McKinsey & Company for a long time, had said, listen, AIG likes people with your background. And for me, diversification is about a few things. It's about geography. It's about line of business, so property insurance, casualty insurance, aviation, different kinds of things. It's about insurance business and a reinsurance business.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Now, while the economy, crypto, and retail are creating some of the biggest waves on Wall Street, there is another company making notable moves as well. And for that, I want to send things over to my colleague, Trinity Chavez. Trinity, good morning.
Hey, Kristen, good morning. That's right. So shares NYSE-listed Universal Technical Institute hit a 52-week high after the company reported its Q4 earnings and year-end results. It's the latest report, and the company said that its year-over-year revenue increased by more than 20%. Jerome Grant, the CEO of Universal Technical Institute, is joining me now. Good morning, Jerome.
Good morning. How are you today?
Great. Thank you for joining us on the show. What would you say? Absolutely. Now, let's just talk about the report. What would you say is the biggest takeaway that viewers should know about your latest quarterly earnings?
Well, I think what's happening right now is really a shift in momentum in our market space. Universal Technical Institute trains skilled workers in the areas of transportation, skilled trades, and energy and healthcare. And what we're really seeing is an inflection point in the market where people are realizing that these are huge opportunities out there, and we're attracting more students into our programs.
And what are you seeing in terms of demand across the transportation, skilled trades, and healthcare and education industries? What are the biggest trends right now?
Oh, sure. I mean, demand is growing and momentum is growing. Is one of the things that we've always said is at Universal Technical Institute, which focuses on transportation, skilled trades, and energy, there are 3 to 4 jobs on the job board for every graduate, and growing. In the healthcare areas, it's actually even more acute, the demand. Places like nursing, dental hygiene, and all of the technical fields that surround a doctor in a hospital and clinic. And so we see, if anything, the opportunity to continue to grow, and that the upside is actually quite positive.
Now, I know that there are different divisions within the Universal Technical Institute umbrella. So can you break down each individual one for us?
Sure. So we have 2 divisions. Universal Technical Institute, 60-year proud tradition, serving the areas of transportation, auto, diesel technicians, et cetera, skilled trades, things like HVAC and welding, and renewable energy. We focus on wind energy right now. So that's about 2/3 of the company. And then the second division is Concord Career College, which we acquired 2 years ago. Concord has 17 campuses around the country that focuses in healthcare and dental skills.
How would you say that UTI positions students for success?
Well, it's a great question. One of the things UTI prides itself on is really, really tight industry alignment. We have over 13,000 employer partners who have registered to get access to our graduates. We have over 50 OEM partners across UTI and Concord who we work very closely with to make sure that we are on the leading edge of technology, of innovation, and aligned with where those jobs really are.
Now, UTI currently operates in 9 different states. Are you considering, though, expanding your footprint across the U.S. or even globally?
We are actually, and we announced our second phase of our North Star strategic plan with the completion of our 2024 fiscal year. And in that phase, what we outlined is that we'll open at least 2 campuses a year and start somewhere in the neighborhood of 6 to 10 new programs a year for the next 5 years. And so the demand grows, and we're going to try to bring this education to as many neighborhoods and locations as we possibly can.
Jerome, are there specific markets that you're identifying when you're considering your expansion plans?
You're talking about geographic markets?
Yes.
Yeah. Well, I mean, it's very difficult to find a major city in the U.S. where the demand is not acute. So we look carefully at the demographics, at job growth, at the student demographics that come into it. But and we're not ready to announce our cities just yet. For the first 3 campuses will launch in 2026. But we're very, very close. And I think if you think about it, it's really difficult to find a major city we're not in that wouldn't benefit from the programs we bring to market.
Well, thank you so much, Jerome. You're going to have a busy 2025 ahead. Again, that's Jerome Grant, CEO of Universal Technical Institute.
Thank you very much.
Now, I do want to bring my colleague Kristen Scholler back. Now, Kristen, we're getting ready to ring the opening bell in just about 60 seconds. And, you know, we're following a lot of activity this week.
Trinity, you are exactly right. And stocks looking to open this Friday morning on a high note, fractional gains across the board. That's after a better than expected jobs report showing that employment did rebound after a slowdown in October due to strikes and several hurricanes that month. So 36,000 jobs added in October. We got an upward revision there, and 227,000 jobs added in November as that unemployment rate ticked just a little bit higher.
And we have a lot to look out for as we are about 20 seconds out from opening up the U.S. equity markets, Kristen. So I think that we're going to have to turn it over to the bell ringer in just a few moments. Actually, we're getting word that's about 5 seconds away. So we should tune into that right now and meet you back on the other side.
All right, we are officially off to the races. Albany International celebrating the opening bell on this first Friday of trade in December. And of course, investors reacting to the latest jobs data that we got earlier this morning, 8:30 a.m. Eastern. The numbers hit 227,000 jobs added last month. That was a bit above expectations of about 214,000. And we saw upward revisions to October as well. 36,000 jobs added that month versus the initial read of 12,000. October numbers were an outlier because of worker strikes and several different hurricanes, but it does show that the economy is still on solid footing ahead of that Fed decision mid-December. In fact, traders pricing in a nearly 90% chance, a higher than previous chance after this positive jobs report, that the Fed will move ahead with another 0.25 percentage point rate cut when we get its latest decision on Wednesday, December 18th in the afternoon. We're looking at fractional gains across the board And with that, I do want to bring in my colleague Trinity Chavez to talk more about what we are seeing happening in the tech space. Trinity.
Hey, Kristen. Yeah, so earlier this month, the AI Trailblazers Growth Summit was held right here in New York City. Leaders from a range of sectors, from financial to consumer goods, convened to discuss the potential of AI within their organizations. Greg Kahn, he is the CEO of GK Digital Ventures and co-founder of AI Trailblazers, was among one of those featured speakers, and he is joining me now. Good morning.
Good morning, Trinity.
It's great to have you on the show. Now, can you just start by giving our viewers a little bit of more insight of what this summit was and what your biggest takeaways were from it?
Yeah, Trinity. So this was the 7th summit that we've conducted this year, 2 in New York City. And it's really been a culmination of an acceleration of AI across a number of different industries. But we really were focused on growth opportunities in this summit. Several of our other summits earlier had focused on efficiency and creativity. This is the period of time where boards and organizations are being pushed to figure out where the growth and where the revenue opportunities lie within implementing AI tools and systems.
And you know, AI is at the forefront of conversations, especially here on Wall Street, but I'd be interested to know your take in what ways companies are really utilizing this technology in their workflows.
Yeah, Trinity, first let me start by saying that we all know that AI is expected to contribute $20 trillion to the global economy by 2030. That's approximately 3.5% of GDP. So every board and every company is being really encouraged strongly to implement it among their workflows. Where we're seeing real opportunities, and I'll give an example with the financial sector, is it's being used for financial compliance, for personalization at scale, using app data and banking information to deliver personalized messaging, and also for customer acquisition, so to predict and to respond to customer needs in real time. So both from the compliance standpoint as well as from the growth of acquiring new customers is where we're seeing opportunities. This particular summit that we held focused also heavily on the marketing and media industries. Those are 2 industries that were early adopters to the space, but perhaps have the most to gain or lose from implementing AI technology.
You know, Greg, you bring up a lot of good points on how AI is beneficial when it comes to the implementation into business strategies across the board. However, I do want to talk about some of the risks and challenges that might be associated with the implementation of this technology, especially when it comes to cybersecurity, and how you think businesses should mitigate through this risk.
Well, I mean, cybersecurity is an issue even before AI implementation came into the fold. It's something that boards and company leaders are taking very, very seriously. And we all need to future-proof our internal systems by forging partnerships, continued partnerships with the technology behemoths of which are really at the forefront of cyber security. And, you know, in terms of one of the biggest risk areas, Trinity, that we're seeing is that employees are fearful of telling their senior managements that they're using AI. They're fearful for their jobs. And so what that means is that they're using their personal devices to use AI tools and systems. And as we know, that opens up companies to risks. So if they're, you know, ingesting internal data or providing internal data to some of the LLMs, there's enormous risk as it relates to cyber. So what does that mean? It means companies really need to engage their employee base. And number one, make them aware that it is okay to test out new tools within certain guardrails, set some rules and regulations internally. But B, to provide a culture of testing and learning, because as we know, as we saw with the advent of the mobile phone, and particularly around COVID, when everybody started to use their personal device as their work device, the cat is out of the bag already. And so companies need to embrace the fact that their employees are going to be using AI, particularly the younger employees, but really we're seeing it across all demographic segments, and to create the proper rules and regulations internally to make sure that they're using it properly.
And I understand that your firm aims to drive growth for Fortune 500 companies and brands. Can you tell our viewers a little bit more about how you're going about accomplishing this?
Yeah, sure. There are many ways in which companies can think about growth. One is developing new products or services using AI to help them figure out what particular product they should be developing, what new markets they should be entering, and for their customer base, whether it's B2B or B2C, whether they should be developing a new strategy for the existing customer base to try to increase the size of their basket, as it were, or whether they should be, really kind of enhancing their current strategies, their current customer base. So, thinking about growth is a very different mindset than where CFOs are really been focused on, which is about the efficiency and the cost savings, and it requires cooperation among the entire senior management team, from the chief strategy officer to the chief operations officer to the chief marketing officer, and of course, the chief technology officer, to really understand where the growth potential is for certain industries.
Now, Greg, we have about 45 seconds left here. Your firm also works with startups. So which types of emerging tech companies are you working with right now? But what are you looking for when it comes to startups in the first place?
Yeah, I'm an active angel investor and advisor to quite a few startups. I had previously started the Internet of Things consortium around connected devices. So, what I look for, of course, I look for strong leaders and folks that have a track record of success, but I also look for unique solutions within specific industries, whether that industry is defense, whether the industry is in digital luxury and jewelry, whether it's in blockchain. I look for areas where there are problems that can be solved via technology, and that's where I place my bets. I think the big opportunities are in endemic areas and specific industry verticals rather than looking horizontally, where the bigger companies that exist today don't have enough data and enough coverage, enough experience in those particular segments. And a smaller, nimble company can grow very, very quickly and amass significant opportunity in the marketplace.
Greg Kahn, CEO of GK Digital Ventures and co-founder of AI Trailblazers. Thank you for joining us.
Thank you, Trinity.
Now, don't go anywhere. More NYSE TV Live is coming right up, right after this break. You're here at the New York Stock Exchange for our annual Space Summit. This is your first year attending. Talk to me about why it was important for you to attend.
For decades, space was not really talked about, and particularly in the world of investing and early stage investing, it was not a smart investment to make. It was not, viewed as salient or viable given the long time horizons, the capital intensity, and that is all changing. So all of the work that the industry has been doing behind those closed doors, behind the curtain, is now coming to fruition. And so the best time to make these investments, especially in early stage, is just before something is about to happen and having that timing exactly right. And so that timing is now.
Talk to me about, from your standpoint, the criteria in which you consider before deciding who you want to invest in.
The fact of the matter is 776 is a generalist firm. And so this is not our deep area of expertise. We are an inch deep, a mile wide across different sectors, which is a beautiful position to be in, to really understand how all of these economies fit together. And for me, the interesting thing about space is that they're actually creating their own new economy. And so the in-space economy for me is wildly fascinating. And the opportunity, from an investment perspective is massive. And the opportunity and the capabilities that this is going to breed for us here on Earth, for humanity, the human side of this is absolutely fascinating for me. And so we typically make one moonshot investment per fund. And so we're relatively new to the space as investors, to the sector, I should say.
Yeah,
the sector of space, yes. and so I'm really here to learn. I'm here to understand what people are talking about, where the industry movers and shakers are. But the deeper I get into this, the more and more obsessed I've become.
And where would you say the different areas in space are you targeting right now?
There's a lot of...
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. I want to talk more about the financial technology space. Trinity Chavez was in Las Vegas for Money 2020, where she spoke with Daily Pay's CEO about on-demand pay. Let's take a look.
Tackling the paycheck to paycheck cycle that so many people are living in. And we're doing that by Pretty simple concept, actually, disrupting the last thing that people wait for in life. If you think about the things that you wait for, right? You don't wait for your shows, you don't wait for food, you don't wait for a ride. Even if you're sick, you don't wait to see the doctor. You just get on telemedicine. But yet, people go to work every day and then wait 2 weeks or more to get paid. And it's creating this paycheck to paycheck cycle. So we are dismantling that by bringing earned wage access to people that can work and get paid in the same day.
And you actually work a lot with NYSE listed companies.
We do.
Talk to me about why you think your concept resonates so deeply with companies like Target and Kroger.
Well, companies like Target and Kroger, they see it is always incredibly difficult to hire and retain frontline workers, regardless of whether the economy is strong or whether we're in a weaker economy. It's always a challenge of really being able to retain great people on the front lines. And so they work with Daily Pay because they've seen that when employees are using Daily Pay, they stay longer. They're more engaged with their employer. And in fact, they feel like they're in a situation that's a win-win with their employer.
How is earned wage access impacting the overall employee experience?
Earned wage access is an incredible impact to the employee experience. In fact, our clients will tell us that it's the top adopted benefits across their workforce. And it's because it's something so simple, right? If you think about people are working to obviously have money to pay their bills. But those bills don't always come in 2-week increments. So it's very hard to plan life, even if you make a monthly budget. If your rent is due before your payday, right, that's not helpful. And so what employers have found is that when they give their employees earned wage access, those employees then can really take care of life on a daily basis, and they feel much more empowered. And they've been avoiding anywhere from $600 to $1,000 in fees throughout the year. Think of overdraft fees or worst case scenario, payday loans. But being able to just access your earned wages that you've already made to be able to pay for the things that you need to or want to on a daily basis.
And you're here at Money 2020. You actually have a few announcements that you're sharing.
That's right. So we've recently announced international remittances in partnership with Visa, which we're really excited about. We're bringing the concept of being able to send money to friends and loved ones around the world, in fact to 70 countries, into a real-time moment into Daily Pay. So it's tied right in with people's earned wages, and they have that ability on a daily basis to earn and be able to send money abroad.
And speaking of news, let's talk about Citi and the expansion of your credit facility.
Yes, so recently with Citi as well, we've raised another $100 million into our credit facility, and it's really supporting the growth that we have. Every year we're adding hundreds of more employers to the Daily Pay platform, and then their millions of employees. And so Citi has really leaned in as a great partner to us to continue to grow that funding warehouse, to continue to support the growth that we have with our customers.
Well, earlier this hour, NYSE listed Albany International celebrated the opening bell, and Trinity Chavez has more now with the CEO. Hi, Trinity.
Hey, Kristen, that's right. So before Albany International CEO Gunnar Kleveland joined the company back in 2023, he was a fighter pilot in the Royal Norwegian Air Force and finished his 15-year career in the Air Force as the Chief of Flight and Safety. Gunnar is joining me now to talk more about this. You're fresh off of the Bell podium. How are you feeling in this moment as you opened up the U.S. equity markets and people from around the world, including your colleagues and family members, they were tuning into this moment?
Yeah, very special moment, and we're so proud to be here and thankful to New York Stock Exchange and Eric and Tara for letting us do this honor. We're actually here today with our entire board for our December board meeting, and it's just such an honor. It was great. Everybody is just so excited to be here, and you can see Albany International all over the floor. Yep. And that is very, very, very special. And yes, I have family back in Europe that watched this live this morning or afternoon for them, as well as our companies around the world.
Yeah, you're celebrating 50 years, over 100 years since its founding, 50 years being listed here at the New York Stock Exchange. Talk to me about the significance in that.
Yeah, no, it's a company with long traditions. Next year we'll celebrate 130 years. And this year we're celebrating 50 years with New York Stock Exchange listing. and that it just was so fitting that we could come here and do our board meeting and then ring the bell. It's just perfect.
And I want to talk to you about your past, your history, your experiences, and your time in the Air Force, and that transition, you know, from your time in the Air Force to becoming CEO of Albany. Of course, there was things that happened in between, but talk to me a little bit more about your background and everything that you've learned from your past experiences and how you apply it today.
No, when I was ready to leave school and start a career, I watched this movie called Top Gun.
Yeah.
And I am part of the Top Gun generation. I went off and became a fighter pilot, and that's what I wanted to do. But deep down inside, I knew that I had something else in mind for what I was going to do with my career, and we took our family and saw the biggest opportunities here in the U.S. and we left Norway and showed up here, and I was fortunate enough to get a role with the Textron and Bell Helicopter, where my career started, and I had a great career with Textron, including a couple of CEO roles there at their business units, but it really culminated in this role, and leading a company that is listed on the New York Stock Exchange is very special. I couldn't tell anyone to duplicate how I got here, but it is all about setting goals and doing your best wherever you're at.
And
right?
Speaking of goals, could you briefly tell us what your top priority goals are for your business as you move into 2025?
As we go into 2025, our biggest opportunity is on the two businesses that we have. I'll start with machine clothing, which is we make the clothing or the belts that go on paper machine and other industrial machines, and we have a great position in the market. It's very profitable part of our business, great cash generator, and how can we grow that business and continue to be a leader in that segment of the market? On the aerospace side, we took this material science and technology that we have from making these belts into the aerospace, which part of the reason why I came to Albany was seeing how they took this technology and was able to apply it from scratch into aerospace, which is a hard place to go in. And we make the blades on the LEAP engine that goes on the A320 as well as the 737 MAX. And using a 3D woven preform that is injected with resin and just a phenomenal composite parts. So the goal there is to proliferate that technology throughout aerospace. Wow. And there are probably other places that we can go as well.
A lot to look out for come 2025.
Yes, it is.
And thank you so much, Gunnar Kleveland, CEO of Albany International. Thank you for joining us.
Thank you.
Now, with the crypto industry in the spotlight, here's some trivia for you. After we take this break, who was the first player in the NFL to be paid in Bitcoin? We're going to find out that answer as soon as we come back.
So now, Chris, tell me about the MLS Innovation Lab program and what it means for Major League Soccer.
So we launched Innovation Lab last year because, MLS has always been at the very forefront of innovation. We were one of the first leagues in the world to launch automated review. We, have our global media partnership with Apple, but we never had a formal innovation program. And so we thought this would be a great opportunity for us to take all the energy from our league, our clubs, our youth leagues, and centralize it and build one central program that we call the Innovation Lab. We see hundreds and hundreds of companies apply every year, and we select the best 6 or 8 to work with us on a 9-month program where they get to really test and try out their technologies. We get to spend time with amazing young founders, and together we get to build the future of sport in North America.
Now, when it comes to evaluating companies to invite to participate in the program and for MLS to potentially invest in, what are you looking for?
Of course, it always starts with what's the idea? Does this founder have something we think is compelling that we can actually use in MLS or in one of our academies? And so that's the starting point. What's the technology? What's the product? And is it interesting to us? And then we do all of the normal things. We spend time with the founding team. We understand, what their vision is, who they are as people. Finances of the company, of course, matter. And then we evaluate all of that, and we go through a deep screening process, lots of cuts, and then come up with the final couple companies.
And tell me, what have been the biggest learnings so far from the MLS Innovation Lab? And personally, what have you enjoyed the most?
So the best is spending time with founders. I mean, you get to do it every day. The energy that startup founders bring is just incredible. Their ingenuity, their drive, their passion. I would highly recommend for any CEO, any executive, to go get out of your office and go spend time in the startup world and bring some of that energy back to your company.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, in 2020, Super Bowl champion and former NFL offensive lineman Russell Okung became the first player in league history to be paid in Bitcoin. Okung opted to have $1 million salary converted into Bitcoin, which at the time was trading at only $27,000 a token. Well, Russell Okung joins us now from Abu Dhabi. Russell, so good to see you. Thank you for joining even amid the time change. And I know you are in the UAE for the Bitball Flag Football Tournament. What is this event all about?
Yeah, thank you for asking, and it's an honor to be here. So, what is Bitball? Bitball is American football's elegant evolution. And I'll rephrase that. Bitball is the evolution of all sports, but American football is going to be our first product. It's a game where there's no heavy hits, no just quick cuts, sharp routes, lightning fast decisions, and really it's more than football. It's more than flag football. It's football's future, and we're merging global digital and an unstoppable form of value with it. We're finding talent in Brazil, we're finding talent in the UAE, and we believe there are incredible horizons once talent merges with technology.
I love the helmet, Russell. What was behind that choice today?
Well, my helmet used to protect me from CTE, and now it protects me from NPCs or non-playable characters. But here's the truth. Satoshi has revealed to us that liberation can exist in our own minds, within our own ability, and no permission is needed. Right? So when I think about my time in sports, this was a symbol of protection. And now instead, it's a symbol for what people are capable of. What do athletes do that is absolutely amazing? We have a form of spatial intelligence. This means that we can process multiple variables and read patterns and see what others miss. Right? And that's what Bitcoin. That's what Bitcoin was for me. It was a time where I took the same mind that could read defenses and anticipate plays, right? And now I read markets. I see a financial pattern. I see the future, right? So I went from field vision to financial vision.
Russell, we are having some audio issues on my end. I'm not sure if it's the same for the viewer. I'm so happy that you're able to join us from Abu Dhabi, and I want to continue the conversation about Bitcoin, but at this moment we are going to need to take a pause. Maybe we can take a live look from the trading floor, as the issue seems to be with my earpiece.
Welcome back to NYSE TV Live. I'm Trinity Chavez. We are rejoining Russell Okun. He became the first player in the league history to be paid in Bitcoin. To continue the conversation you were having, Russell, with my colleague Kristen, and we're going to pick up the conversation where we left off. So earlier today, we mentioned how you were the first NFL player to get paid in Bitcoin. Why were you so bullish on the digital asset at the same time?
Yes, it's a really good question. So let's rewind and think about this. Tom Brady, Michael Jordan, what do we know them for? You know, championship rings and trophies, and they're the GOATs of their game. But here's what we forget. There's a moment where the confetti falls and the trophies collect dust. And then rings lose their shine, and records are always going to be broken. So something I've always imagined is, what if athletes fought for something much more permanent? What if they fought for something that could exist from generation to generation? So despite what people like Peter Schiff might say, the greatest trophy is not gold or some ring, it's Bitcoin. It's Bitcoin. And I knew that when I was in a situation where I was trading my health, right, for wealth, I need to think differently. I need to make decisions to actually think about the future. And it wasn't until a moment where I was actually playing a playoff game and I saw one of my friends take a hard hit to the head.
Russell, you are bringing up so many good points. And, you know, with Bitcoin surpassing 100,000, we're going to be following this story. But thank you so much for joining us. We look forward to having you back.
Thank you.
Now, I do want to bring we're going to go to a video, and we'll see you next time.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies